Hello and welcome to Edison TV. Today I'm joined by Johannes Laumann, Chief Investment Officer at Mutares, an investment company acquiring businesses in special situations that are underperforming and can be turned around through financial and operational restructuring. Johannes, thank you for joining us today.
My pleasure.
Maybe you can start by discussing the investment process you follow to achieve your targeted return on invested capital of 7 to 10 times.
So in general, we are an investment company focused on turnaround situations and very much there insisting on the operational turnaround of a company. So when we acquire a company, I would say in 80+% of the cases, we're talking about carve-out situations. So our first step is make it stand alone, carve it out of a big portfolio. We're currently in the processing of closing a transaction where we carved out a business in Denmark, Poland, and Serbia from Deutsche Bahn AG, put it standalone. And then we start our restructuring process with our 130+ operational people on a day-to-day basis. And this is also our main investment decision. So can we make the changes? Can we make the company better with our operational skill set, with our operational people, and make the company tomorrow better than it is today? So this is one of the key ones. And then second one is, does it fit in our investment strategy, KPIs? When it comes to size, we are targeting companies between 100 and 750 million of turnover. Does it fit into our segments, where we talk about companies in automotive, where we talk about companies in engineering technology, which is basically project business driven, and we're talking about companies in goods and service, where we have the B2C angle, but all surrounded by the fact, can we make the company operationally better than it is today? And those are, at the end of the day, the criteria to invest. And then, as always, the last 5% is my personal gut feeling, if it's a good deal or not.
Perfect. Thank you. That's very helpful. Now, given that you're a turnaround specialist, to what extent has your new investment pipeline benefited from the recent macro challenges?
Well, you know, in every time of a cycle, we have chances and we have kind of challenges. And obviously, in difficult market conditions, we have a lot of buy-side opportunities. And that we see also now. Typically, the beginning of the year is very slow. And then in March, it kicks in. And this time it kicked in. Wow. So the pipeline kind of exploded. We do see a lot of transactions coming. We do see 4 to 5 until the summer, maybe. Which we can do if we want. And so we have a lot of buy-side opportunities. On the other side, we have challenges in our portfolio. Now, luckily, Q1 was very good for the automotive environment. But as you can imagine, the last year, we suffered quite a bit on this discipline. On the other side, project business, where we are significantly exposed to the energy market, transformers, heat exchangers, etc. This apparently is a good business at the moment, okay, because you get in all these autark situations. And then goods and service, where we have a certain dependency on the end customer base. This is something which was good last year, but obviously now in the first quarter 2023, it suffered a bit because the consumer appetite and, matter of fact, kind of slowed down. So we have the challenges in our portfolio, but we have obviously the opportunities on the buy side in this kind of shaky market conditions.
Thank you. So now it will be good to sort of ask you about the realization side, obviously. So maybe we can talk about some of the successful realizations you did recently.
So in fact, when we speak about realization of success, we speak about 3 kind of pillars or 3 kind of streams, how we define success. So the first type is we have our operational people. We send in and we charge and we make a profit out of this in the holding. And there, the realization profit is how much are we going to do with that? And that's roughly an income of, depends on the months, of 8 to 10 million euros per month, which we charge into the portfolios for the service we provide through our consultants. So this is the first, and this developed significantly because we added roughly 30 to 40 people per year in the last 3 years. So we added 100 people in total in the last 3 years in these operational forces. And then the next one is we take out dividends from companies. And that we did very successful in 2022, coming dividends predominantly out of the project business, because that went very well in 2022, all around the energy market, but also the paper and packaging market was was doing very well. So also there we had the chance to take out dividends very successfully. There in the name you can name Clecim, you can name La Rochette, but you can also name the Balcke-Dürr NEM group. And then the third one is the exit. When we say goodbye to a portfolio company. The recent exit we have signed and we expect the closing in the next week and months to come is SMP, Special Melted Products, up in the UK in Sheffield. It marks the largest exit, or it will mark when it's closed, the largest exit in the Mutares history, with an enterprise value of roughly 150 million, which asset is the biggest one. However, here we made a fast turnaround. We increased the profitability by 30 million euro, 30, in less than 18 months, which I think proved our concept. And now we move on, or the company moves on with the strategic buyer. There's an absolute win-win situation. They will grow this company much further than we ever could. Their abilities, their market entries, their strategy to combine it with their assets is something we could never do. So we have a win-win situation here, and I'm very happy that we found with Konje the absolute best new owner. And so you close the loop. Same for SMP. We send in our consultants. We turned the 30 million. We took out a little dividend last year, also project business and the energy market predominantly, and the oil and gas market and the aviation market. And now we sell it off. Closing date is still vague because we are depending on authority approvals, and we don't know when we can expect them. So it can be fast, can be long. We don't see any risk, but we can't impact the timeline. So those are, I think, the three pillars: consulting fees, dividends, and exit proceeds. And those mark the success of Mutares in the last years, but also in the years to come.
So thanks, that's very helpful. And maybe you can also talk us through your approach in terms of your balance sheet management in the context of your recent announcement related to the potential bond tap issue. Yes.
So I think what we have done, we had out a bond which went there 3.5 years ago. We refinanced that 3.5 years ago. We were 1 billion in turnover. Now we expect this year roughly 5 billion. And at that time, we raised a bond of 80 million euros, Nordic bond facility. And that was due to refinancing, and we topped it to 150. Revenue is ×4, profit is ×5, profit is expected to be ×5, employees are ×6 or 7. So and we kind of only doubled the debt side. We also did an equity raise in 2021, but with a balance sheet of the holding where we now have the 150 million of debt. We are fine, we are good to go, and we believe this is it on the capital market side for the next years to come. Why is it important, and why we take it on the holding and not deal by deal? It's in essence that we are flexible, agile, and fast. So I'm in the board since August 2019, and I think the fastest deal from the first approach to a signing of a transaction was 3 weeks. Obviously, you can't arrange financing in 3 weeks. Actually, this was a call at Santa in December, and we had to sign the transaction before Christmas. So this is something where you need to be flexible, where you need to be agile, and where you need to have the money available and ready to shoot at any time. So that's why we finance on the holding, on the listed vehicle, so we have the flexibility in order to transact when needed.
Thank you. And finally, you've been a quite generous dividend payer in the past. So maybe you can talk us through your dividend policy going forward as well.
In general, I don't know if we are generous. One of our strategies is to let our shareholders participate on the success we had, and obviously, we had a lot of success in the last 3 years. We are very pleased on that. We also know that it conducted hard work, and that's why we also let our shareholders participate. On the other side, bear in mind, 38% of the shares are in the hand of the management and the supervisory board. So we have a full alignment of interest with the rest of the shareholders as a management. And as you could see from some directors dealing already in the past weeks, we also added up more shares. So I can only speak for myself. Obviously, it's a little bit rude to speak for Robin and Mark, my fellow board colleagues, but I'll acquire additional 7,500 shares 2 weeks ago. My 6-year-old is very happy about that. But that also proves that, you know, we acquire our own shares, we give it to the next generation already. And this, I think, should also give a signal to the market. We believe what we do, and we believe in the journey, and the journey is not by far not at the end stage. So there's quite a bit way to go. What we have ahead in the growth. So we are somewhere in the middle.
Johannes Laumann, Chief Investment Officer at Mutares. Thank you very much for your time.